Hey, it's Michael Saul with the Stock Market Trading Watch List for Thursday, August 25th, 2011. Let's start with the SPY as always. You can find the SPY analysis on the blog. So let's take a look at what happened here using the SPY as a surrogate for the S&P. At least, I know I like using it better than looking at the XPX. So it gives you a little different look. Anyway, the model played out as expected after the expansion candle here. We had a push up that was faded, then a push down that was faded, and then a late afternoon breakout here. Now, volume also came in on overall New York volume. That's not really bullish. We have the gap fill at 118.72, the lap fill at 119.67. Also lines up with this 20 EMA. So let's see if we can push higher into that moving average. Now, the news of the day happened after hours on Friday as Steve Jobs resigned as CEO of Apple, and now he's chairman of the board, and the COO has been made the CEO. Now, I can't even pretend that I know how this is going to affect Apple stock on the long term, but with a big gap down, and it says here down 1650, it was halted and then it was reopened. But this last quote, I mean, if we open around that, it'll be almost a 20-point gap down from where we closed on Wednesday. So if that were to be the case, there could be a really nice opportunity here for a potential fade. Now, before we got this bounce, I was looking for us to retest this low here at 353. So that's going to be short-term support, and then 10 points lower is the 200-day moving average. So watch this one carefully. I mean, if you're nimble, if you're a day trader, if you have some techniques that you can use, options, futures even, or just the stock, or maybe even some ETFs if you want, because the NASDAQ will more than likely gap down with it. I mean, it's gapping down now, the futures, and the S&P as well, but not as much. So, you can watch for a fade. And if that fade starts to fade, then you can watch for maybe a push down to the 200-day moving average, okay? I'm not a big believer in just running right in at the open. I like to wait a little bit, but, whatever you decide, I mean, it's your risk, it's your money, okay? So that's Apple. Let's go back and look at a couple of indexes real quick. Okay, NASDAQ 100. You can see the same thing. A little bit of a continuation. That'll be open for interpretation after we see what it does with Apple. Russell, the same deal. Dow is obviously going to be the same as the SPY. Okay, watching that 20 EMA there as well. Semiconductors. Okay, didn't really have an update here. Had more of a doji. So we'll see what happens there. Still see the gap in the 20 EMA as next resistance areas. Here's the banks trying to bounce. Here's the brokers, BROKAS, right? Brokers. All right, here's the brokers. Seeing if it's great when you can laugh at your own accent, isn't it? All right, let's see where this one goes as well. Look at the HMO index, trying for its 20 EMA. Look at the drugs. Somebody wrote me and said, "You're doing the individual drugs. What about the index?" So here's the 200-day coming up there, 314. Okay, let's go back to the stocks. Okay, Google trading a couple dollars down after hours, but you could see here the market closed near its highs, but notice how Google hit the 10-day and reversed. This isn't really looking that strong here. So I would watch this one, especially if the market starts coming back to the downside. All right, and just because I think that we're going to form a consolidation / continuation corrective pattern, that doesn't mean that individual stocks, that every stock is going to abide by that, even if we do. Okay? I mean, there could be stocks that continue down, or there could be stocks that fight it to the way up. All right, Amazon with a doji right before the 20 EMA. Also not looking so hot there. Somebody wanted me to look at U.S. Steel. Yeah, just consolidating here, not doing much. Research in Motion. Okay, broke. I put this on my blog last night. In case you missed it, broke out of this consolidation here. Trading a little bit higher after hours, but see how far this goes. I mean, it has a lot of work to do. Has to get above 30.25 to start. Okay, so that's RIM. Somebody wanted me to look at International Paper. 20 EMA resistance. Jacobs Engineering was requested. 20 EMA. What was it? B-Soft? Yeah, Broadsoft. Nothing. I don't really see much here. It's just consolidating. All right. OIH. Yeah, just a lame bounce. Volume not doing so hot. 10-day moving average here. There's potential resistance. SLV. 2 days down now. So watch the 50-day moving average down here for potential support. 37.23. And of course, gold got spanked. See here, it's forming a doji, right? It had the expansion candle. So just like what we were looking for in the SPY today and the other indexes, it's the same thing here. Big expansion candle, look for consolidation. Difference with commodities is that it can sometimes have back-to-back-to-back trend days. They're a lot rarer in stocks. Okay, I mean, they're rare overall, but they seem to happen. If they're going to happen, they seem to happen more in commodities. All right, so the GLD. Yeah, I mean, that was not a reversal candle. Otherwise, it would have been beautiful because I posted on my blog. It's getting parabolic. And this was just a beautiful push. But I could sit here and maybe you caught it intraday, but there was no reversal candle there. All right, so nothing that I could have said, hey, there's the reversal we're looking for. I mean, I was pointing out the volume divergence, but no signal candle. All right, so that's it. Let's see what happens with Apple on Thursday morning. Have a great trading day. I'll talk to everybody again on Friday.